Hello and welcome back to the channel. So today the stock market is really in the red. I was surprised how red it was, and then I just woke up and I saw this headline saying that the Federal Reserve was going to continue rising interest rates for the foreseeable future. So I guess the market was hoping that they would stop doing that, but they're going to continue. And again, negative effect on companies. It's more expensive to borrow money, and companies with large amounts of debt are going to be paying much higher interest rates. So it increases the risk to investing in a business, especially ones with a lot of debt. So I tend to try to avoid businesses with poor balance sheets that have lots of debt. So that's one way you could fight this and still continue investing. And the drop in prices is definitely a good opportunity to pick up on some of your favorite stocks. I did a little bit of a buy today, so I'll be getting into that. And I also finally reached a milestone of hitting 500 subscribers. So thank you very much to everyone that watches the videos, have subscribed to the video, and keep commenting. I really appreciate that. And I'll get to roll the intro, and we'll see my buys and sells for this week. In the TFSA, we're at $16,105.34. So we're still in the green all time by 1%. So that's nice to see, despite all the choppiness in the market, and especially the down day today, where we're down 2% just today. So in the portfolio, we have about $63 in the cash account. I've already made most of my purchases. I'm just waiting to purchase a little bit more ATD, just because they're going to present their earnings at the end of the month, and I generally like to buy stocks after their earnings, because ATD, especially if their earnings outlook doesn't look strong or their earnings aren't very good, then the stock price could drop a lot. That could give me a little bit of a discount on continuing to build this position. So I'm going to wait a little bit and see what happens. It could also go the other way where it goes up, but generally I like to buy things right after earnings, not before. And we can see some like Apple and Aritzia are still doing fine, so they're still holding up pretty strong in this market, clearly leading the portfolio in terms of performance. And Brookfield Asset Management actually had some very big news that they're going to be funding Intel $30 billion and entering a partnership with them. So this is interesting news, not only for Brookfield investors, but also for Intel investors, because Brookfield is a value investor. They invest in infrastructure, they invest in real estate, they invest in renewable power and private companies. And, if they're going to be investing that much money, they expect a very, very good return at a very, low risk. So low risk, high return is what they're going for, and just consistent, solid returns. So the fact that they believe in Intel so much is making me even more excited about my Intel investment. That the fact that they're investing in it too. And keep in mind, over the past 30 years, they've averaged about 17% annualized returns. So absolutely crushing the market. And they've had the same CEO for the last 20 years, Bruce Flatt. And I've had many interviews on this channel showing him. So definitely check out those videos on Brookfield. I'll be linking them at the top of the video, and you can check those out and learn a bit more about Brookfield, because it's an incredible company. And as a Canadian investor, this is definitely one to have. Like, this is basically our Berkshire Hathaway in Canada. So definitely check them out. And I purchased one more share of Scotiabank since they dropped tremendously. I mean, they had probably a pretty decent earnings report from what I saw, just because they had overall growth. Like, the profit was up from the same quarter last year. So they experienced growth. They didn't quite hit the Wall Street analyst expectations, and then the stock sold off like 7%, 8% in 2-3 days. So I decided to buy another share. And the only real negative about that earnings report was that the international banking went a little down. I mean, which is to be expected. I mean, it's the rest of the world isn't doing so great economically, so it would make sense that their international banking unit wouldn't do so hot. And we even saw that with RBC when they announced their earnings that their banking was down, and they're the most global bank out of all the Canadian banks. So I don't see why Scotiabank would be any different in that regard. But overall, they grew, and RBC actually declined in revenue. So, but the stock wasn't punished nearly as hard as Scotiabank. So, definitely going to take advantage of this opportunity, just because of that momentary weakness in their international markets. But I don't believe it's a long-term thing. It's just it's just not a good time right now. So, anytime this goes down, I'm going to be buying more. And with this buy, I'm actually going to be receiving over $20 from every dividend payment. So officially, this is the first stock that's going to pay me a $20 dividend. So very exciting. Going to see this every 3 months hitting my account. It's going to be buying more Scotiabank, and just we're going to increase our dividends from there. And the other purchase I made was another share of Intel, that because Nvidia reported their earnings and they were not very good. They didn't have very good outlook either. So because of that, all the semiconductor companies fell down. Like, it's basically industry wide. And I decided to get more Intel. It was at basically a 52-week low. And then the great news with Brookfield Asset Management, helping them fund them $30 billion to help them with their expansion and, decreasing their risk, and also not needing to go into so much debt to build out all these fabrication plants. That's where the risk is just Intel has to raise a lot of money and spend a ton of money. But I do believe in the long term that they're going to be making a very, very good return on that investment. And that's why we're investing in Intel now. I'm not waiting until it's turned around and the stock price is much higher than it is right now. So I do believe, at least in my opinion, that this could triple. We don't know when it's going to happen. It could be 5 years, it could be 6 years, maybe 7, but I still think that's a very good return. And we're getting into into a business that nobody likes. At least the market is so pessimistic about it. And the semiconductor industry is expected to double in total size over the next 10 years. So they have that to grow, and also the fabrications. So a lot of good things ahead for Intel from the looks of it. And then the final company that presented earnings was TD Bank. So they actually were one of the banks that actually went up after their earnings, unlike all the other ones. So they had pretty decent growth in their Canadian and U.S. banking, and they also have a lot of acquisitions on the way. So they bought Cowen, which is a brokerage firm in the United States, and they're also acquiring First Horizons Bank. And these acquisitions are expected to close sometime in 2023. Once that happens, their revenues are going to shoot way up. And no dividend increase from TD. They only raise it once a year, so in the next quarter, we should be expecting them to finally raise that dividend. So very exciting. And Tesla performed their 3-for-1 stock split. So essentially, for every one share of Tesla you had, you now have 3 of them. So we had about a third of a share, and then now we're at a little over 1 share. And Tesla's doing pretty well. Elon seems to be very optimistic about the company, and has very, very ambitious goals of maybe hitting 100 million cars sold in the next decade. I don't know if that's going to happen necessarily, but I mean, if it does, it'll definitely be a very, very good return. The price is very high, so this is probably one of the most controversial stocks. You either love it, you hate it, you think it's overvalued, you think it's or you think it's underpriced. There's just so much debate about it. But if you just look at the business model, the high gross margins, that absolutely industry leading, industry crushing, nobody's even close to Tesla's profit margins, and the growth rate is incredible. Like, it's 40-50%. And they also have some other avenues outside of their car business, like AI. They might build a robot. They're still working on their full self-driving. If any of these other things pan out that they're doing, then there's no telling how fast that they can grow. So that's why I'm invested in it, and we'll see how it does in the long term. And with the dividend update, we've received $720.72 in dividends since starting the portfolio. Our annual income is still lower than our peak, just because our Ethereum ETF is paying us less dividends. But overall, we're catching up to our previous totals. We make 226 in dividends every single day, so we're trying to hit our goal of reaching $3 a day in dividends, and the hourly wage of the portfolio is back up to 40 cents per hour. So for a 40-hour work week, our portfolio is going out there making 40 cents for us. This is going to continue going up and up. It'd be nice to get this to $1 and then, just take it from there. All right, so subscribe to the channel if you haven't already. Leave a like on the video. And let me know in the comment section down below. What do you think about Tesla stock? Do you think it's overvalued? Do you think it's cheap right now? Let me know your thoughts in the comment section. All right, have a good day, everybody.